In this video, I'm going to show you some of the most common things that can go wrong during a home purchase. You might be thinking, what could possibly go wrong? Well, in this video, we're going to cover all of them, so let's get to it. Hey everyone, I'm Mark Raumaker. I run a mega icon real estate team called the Home Squad. We're kind of like the Avengers, but our superpower is helping people buy and sell homes. Make sure you hit the subscribe button so you can be notified anytime we drop a new video about buying and selling a home, a neighborhood spotlight, a music video, and much more. You know, we are your best resource if you want a home that's homey and not homely. What can go wrong during a home purchase? Homebuyer mistakes to avoid. According to Murphy's Law, anything that will go wrong will go wrong. Which has always made me think, Murphy, I think you need to go to therapy, man. That's not a healthy way to be that negative all the time. Buying a home, particularly for the first-time home buyer, is one of the largest, most significant, and most complicated purchases that you will be made in your adult life. While this process can be fun, even exhilarating at times, it can also be a roller coaster of emotions and stress. There are so many things to keep in mind and consider during the process that it's possible to make one or more mistakes during the home buying journey. Some of these mistakes can cost you time and cause you to potentially miss out on a home that is actually perfect for you. Other mistakes may cost you money or may cause your lender to reject your loan or your mortgage application. We're going to take a look at some of the many mistakes home buyers can make, how they can affect the process, and talk about ways to potentially avoid or minimize the damage these mistakes can cause. Not knowing what you can afford. Math is one of those things they teach you in school that nobody really uses that often in their adult life. Kind of like dodgeball and reading. Browsing for homes or even touring them and attending open houses before knowing what you can afford can be a huge waste of time. Not only could you spend valuable time looking at houses that are well outside your budget, but you may also waste time looking at homes that are below what's referred to as your optimal price level. The goal of most first-time home buyers is generally to get a home loan that is sufficient enough to allow them to purchase a home they need while maintaining a manageable monthly payment. The best way to avoid overestimating your home purchasing power is there are many mortgage calculators online that can help you narrow down your range. Actually, we have a good one on our website. I just remembered. Why don't you click the link in the description and it'll take you there. You can work it out yourself. Getting a single mortgage quote. My favorite quote by Gandhi is, "Be the change you wish to see in the world." My favorite quote from my bank is my mortgage quote. Home buying is one of the biggest and most important purchases you are probably going to make for several, and in some cases, many years. This means that while you may have a mortgage lender in mind or one that has been recommended to you, you should always be sure you get multiple offers from multiple lenders. Not only might your approval amount vary, but you may find that the interest rates, fees, and points will vary significantly from one lender to another. Many new home buyers are really hesitant to apply for quotes from multiple lenders because they believe that applying for a mortgage is similar to applying for a credit card in the way that their credit score can be actually affected. This is a valid concern at a time when your credit report, it'll be gone through with a fine-tooth comb, but multiple mortgage applications within 45 days will be counted as a single inquiry, allowing potential buyers to get offers from several lenders to pick the best one for them. Not checking and fixing your credit. Bad credit is the kind of thing that will bite you like a dog that's noticed a mailman that's covered in peanut butter. Or his own poop.
Ah, gross!
That was gross, sorry. In all reality, your credit report will never undergo such a deep examination as when you apply for a home loan from a mortgage lender. They will dig into your creditworthiness in a way that few other lenders or credit providers will ever do. This means your credit will need to be in the best shape possible with as few debts and missed payments as you can manage, and failing to do a credit cleanup can leave lenders giving you the thumbs down on the best terms. Now, to help prevent this and to make sure your credit looks as good as possible for the loan application, be sure you have gone through your credit report yourself and fix any negative remarks or negative things that you can. Here's a tip. You can actually get a free copy of your credit report once a year from each of the 3 main credit bureaus, as well as from credit monitoring apps like Credit Karma. Find your debts and either pay them or settle them, but be sure you get a written agreement that when that debt is paid, the company will immediately remove the item from the user's credit history. Remember, credit history favors the bold. Not putting enough down. While your parents or your grandparents might try to suggest that you wait to buy until you can put at least 20% down, this is a relic from a bygone era for most. We listened to our grandparents about a lot of things. What was it like without Wi-Fi? Which is the best hard candy? How did you take pictures with your rotary phone? I don't know. But with home prices skyrocketing, many buyers would be lucky to be able to put half of that away as a down payment. On the other hand, putting away too little can put you in a challenging spot with your lender by making your monthly mortgage payment higher than is comfortable, but it can also force you to buy mortgage insurance to protect the lender. Now, if you simply cannot currently boost the amount of your down payment, remember that there are virtues just waiting until you have more cash available. More than 1 in 10 first-time homebuyers reported that they should have waited until they had put more away. While having 20% down, that means you actually won't be required to purchase mortgage insurance. The average is often more than 10%, but less than 20%. Neglecting first-time homebuyer programs. Don't do that. If you are one of the many homebuyers that are getting ready to buy their first home, there are many different programs that you should look into before committing to anything, particularly since not doing this can prove to be a costly mistake. Many states have down payment assistance as well as competitive interest rates for first-time homebuyers. These programs can also reduce the down payment that the lender will require, and some can even get loans approved without any down payment at all. Neglecting USDA, FHA, and VA programs. Tons of first-time homebuyers won't be able to put tens of thousands of dollars for their loan. However, some programs are offered by the federal government that can help the buyer more easily work with the lender to get a loan that actually works for them. You may think, I'm crazy, but these are the same kind of grants this guy is always talking about.
I'm Matthew Lesko, and the government's giving away more money than ever before! $85 billion!
So it can't be that crazy.
First place! Who cares about hyperinflation, crippling debt, or a massive tax burden on your grandkids? It's all free!
Right? VA loans are for those who have served in the military and they can help veterans get a home with no down payment, only needing a fee instead of mortgage insurance. USDA loans are another loan that can get a buyer into a loan with 100% financing using a similar fee alternative to mortgage insurance like VA loans as well as an annual fee. FHA loans can drive the down payment requirement to just 3.5%. Though they require mortgage insurance for the entire duration of the loan, it still might be a good option. Being unsure of leveraging discount points. Discount points are fees that you pay to reduce the interest rate you pay on your mortgage. A lot of people love getting attention, but trust me, this is one time you want to reduce interest. Interest discounts can potentially save the homeowner thousands of dollars over the life of the loan. However, if just getting the minimum down payment together was a serious accomplishment for you, don't sweat the discount points for now. If you do have enough cash on hand though, they can help save serious money if the buyer lives in the home beyond the loan's break-even period. Emptying all your savings before the sale. Buying any home other than new construction will mean that you will likely need to repair or replace something, and generally that will happen sooner rather than later, or whenever is more inconvenient for you, to be honest. If you've just emptied all of your savings to put down a sizable down payment on the home, this can put you in a really difficult spot. Be sure that you will still have sufficient liquidity once the closing is complete and you officially own the house. You'll almost always need something fixed shortly. That's the problem with liquidity. It's just too damn liquidy. Oh. Applying for additional credit too soon. Now, this is one of the most common ways that first-time homebuyers hinder their buying process. Since one of the heaviest factors in considering your mortgage application is your current debt-to-income ratio, your DTI, changing that in the middle of the process can be devastating. In the period between when you apply for the mortgage and the final closing day, you mustn't apply for or take on any additional credit lines or debt. You want your credit report and your credit score to be as consistent as possible during this critical time. Timing is everything. Focusing too narrowly on the purchase. First-time homebuyers can get too focused on the buying process and the purchase of the home itself, and they actually forget there will be significant additional expenses once the sale has been finalized and the home is closed. Not only will there be ongoing mortgage payments, but there will be all the usual bills and expenses associated with homeownership. Don't get the cart before the horse. In fact, just lose the horse and the cart. Get a car. It's faster. You'll need utilities, homeowners insurance, and potential homeowners association fees. So be sure you estimate these as closely as possible before submitting an offer on a property. Having a solid real estate agent can be invaluable in this respect. We'll figure it out for you. Looking at the house, but not the neighborhood. This is another thing that an experienced real estate agent can help a first-time home buyer with, since many will be laser focused on the home itself in many cases. Make sure you know your priorities beforehand, such as school preferences, job availability, or commute times, and more. Not only is having a good home critical to you and your family, but being in an environment where you can actually thrive is just as important. Underestimating potential renovation costs. Home buyers that aren't buying an incredibly new, recently built home will often have costs of repairs or renovations take them by surprise, even after a home inspection, or more than one home inspection before the sale closes. There are often minor repairs that are needed immediately, as well as changes that the new owners will want to make the home theirs, which will generally cost more than they think. An oddly significant factor in this is how much the home renovation reality TV shows often skew buyers' estimates of the cost, effort, and time involved in these major renovations. I love them, but they're not always accurate. They're entertainment. Reality TV actually has fairly little to do with reality. Not only do most home buyers not have the resources for these projects, but they generally don't have the experience or expertise to do it themselves either. Buying a home with the intent of completely or even significantly renovating it is often best left to those real estate investors or really experienced home buyers. Unicorn shopping. Shopping for a perfect home is just a waste of time and effort since they simply don't exist. By now, you should have a short list of your needs and often a much longer list of your wants. But don't try to check off everything on that list. Once you actually find something that meets most of your needs, it's going to take a compromise to decide on which one checks enough of your wants as well. Dreams are important, but we don't always have our wildest dreams. If we did have our wildest dreams, I would be a superhero who could fly by shooting jello out of my feet, and my sidekick would be a 10-foot dog made of cheese. That really was my wildest dream a month ago. Forgetting about gift money. A large number of lenders will allow some threshold of gift money towards a down payment. This can be money given freely by a friend, family member, charity, or even an employer. This goes without saying, if you have a chance for this, you want to take it because
it's all free.
Make sure any gift money is lined up and fully available before you even start shopping. And make sure you compare gift limits when you shop around for lenders. Buying a home is a complicated process and there is a lot to consider. Even though it seems like there are just too many things to keep straight and that a mistake is inevitable,
take it slow.
Don't forget to pace yourself. It feels counterintuitive, but you want to make sure you don't make any careless errors by rushing. A sloth would kill it in real estate. Too bad they're all working at the DMV. Make sure you have taken the time to give your credit report looking great and you put away a significant down payment into the bank account, then go get plenty of options for your loan. Information will be one of your greatest points of leveraging in having a successful home buying journey, so knowing the common pitfalls can be invaluable. Hopefully, you've learned a lot about how to avoid common pitfalls in home buying. Now, if you're looking for an edge in buying a home in a seller's market, click here. Go ahead. Oh, I'll be there too.